In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day everyone, how you going? It's Phil Tarrant here. Hope you're well. Hope you're smiling despite this lockdown that the nation seems to be in right now. We're sort of getting halfway through August right now, and we've been told pretty clearly by the State Premier here, Gladys Berejiklian, to hold on to the 28th when there's going to be some understanding of whether we remain in lockdown, whether we can emerge from it and what that will look like. I think one thing that we can be assured of that there's going to be disruptions up until the end of the year and some sort of restrictions. That is impacting on property markets, but doesn't mean slowing it down. I was going to look at auction clearance rates over the weekend, and even though people can't get together for auctions, there's a lot of online auctions and there's property still selling. However, I think a lot of vendors are not actively taking properties to market, waiting for something to get back into face-to-face auctions, face-to-face sales, being able to go and do open homes. So lots of changes at the moment. However, it's good to see the tenacity of the real estate, tenacity and the resilience of the real estate sector. It's what underpins Australia's economic prosperity. You can get caught up in discussions around property being overcooked and there's bubbles in the housing market. But I think by and large, Australian property operates differently to other parts of the world. And that's the reason why it's been such a good asset class for many years and will be into the future. The way in which people invest in property is always changing. We're very fortunate that in Australia, we've always been innovative from the hills hoist. Some people will say it's Australian, all the way through the black box inside of aeroplanes. Innovation has been key. And we're seeing that now in financial services and really smart people out there right now changing the way in which people can access credit, short-term credit. Everyone's aware of and familiar with the success story that is Afterpay, which got some sort of stupid valuation recently from getting swallowed up by an American firm. It's really the reverse of the old traditional lay-by, which around when I was a kid, where you pay off installments to buy something, then you go and pay your last installment and pick it up. It's the reverse of that. You pay it off over time, credit essentially. And that's now sort of moving into the real estate sector. There's some businesses emerging, which are, some would argue, true enablers for property investors, real estate agents. But for the purpose of this particular chat, we're a property show helping property investors do what they do more effectively. Today's going to be one of them. And whether or not you're polarized by the sentiments around easy access to credit and how credit is changing, whether it's a good thing or a bad thing, one of the key sort of guiding principles here on the Smart Property Investment Show is obviously we talk about good debt. And I like to think that securing property, leveraging the finance available is smart debt. By and large, Australian property goes north in value, goes up and down sometimes, but over the long term, it's a good asset class. So largely debt in property is good debt. And you're getting these applications now of Afterpay type arrangements helping property investors. So let's get stuck into it. I've asked into the studio, Sam Redke. He's the director of a business called Realty Assist. And the way that they're framing everything, once upon a time, they talked about innovation. It's the Uber of something. This is a business which is the Afterpay for real estate. Did I get that right? Sam, how are you, mate? You well?
Yeah, I'm absolutely well, mate. I appreciate it. Thanks for bringing me on. Yeah, in summary, I suppose that's the easiest way to put it. That's the way I explain it to people with the Afterpay of real estate. And there's so many opportunities for us to fund a transaction and get things moving. So we jumped into that and kicking goals in that space.
Yeah, so this is, I guess the more formal designation for this sort of stuff is buy now, pay later, as in get something now and pay it off over time. Afterpay, you pay off installments and you incur fees around it if you don't pay it off in time or you go into arrears on it. And all these products are different in some way. We'll have a chat about Realty Assist and how that works. But so this is sort of the buy now, pay later for real estate transactions. And there's a whole bunch of different parts of real estate. There's the agent side, and I know you service the agent community. We get a lot of agents actually listen to this podcast, but for the purpose of this, I want to talk about your product, how it works, how it can be a utility for property investors and whether or not they should be considering other ways to finance parts of their property investment journey outside of the traditional bank lenders who give you mortgages. So can you give me a quick sort of 101, Sam, on what this product does and how it works?
Yeah, so effectively, and I'll cut to the investor side, as you said there, Phil, the most important thing is the delay in access to money, whether that's if you're going to a bank to get a bridging loan to purchase a property that you found, which is perfect. A bank will typically take 3 weeks, slog you with a bunch of fees and exit fees. Whereas for investors, and where we found one of our products, Settlement Collect, as an example, worked really well. If you've got a product and you've got equity, I can give you up to 80% of the equity in one of your properties immediately within 15 minutes, have that approved and funded into your account. Now, the fees on that probably are in line with a bank, if not a little bit slightly higher. However, if you look at the market that we're in now, and like you said, rightly so just a minute ago, whilst we're in lockdown and stuff, market prices still continue to climb. And often within 4 weeks, if you're talking an additional $1,000 that you pay Realty Assist as an example to get access to that funds, the loss of opportunity, if you waited 4 weeks to miss out on that property or the value increase in that property anyway, it seems like smart money in most cases to come to us and get the money fast. And, and often in other cases, you can wait for 3 weeks for the money and you might not even get it anyway, and you still lose the opportunity either way.
So I'm a pretty simple bloke, so I like to sort of dumb things down so I can understand it. So That particular scenario, let's use that as a bit of a case study into how these sort of financial products work. And I'll preface this is just a discussion, a couple of blokes talking about this. I'm not giving any financial advice around this either as Sam. Everyone's circumstances are different. So if you want to go down the pathway of considering this sort of stuff, you've got to look into it and check it out, make sure it's right for your needs. But sort of disclaimers aside, Sam, so on that scenario, so I've got $1 million property that I've sold for $1 million. I've got contract signed at exchange and it settles in 6 weeks' time. So the deal is going to happen largely, right? So what you will do is front 80% of that transaction cost. Is that right? So 800 grand, maybe that's too much. I don't know what your parameters are, but that's largely what it is. So you get access to that money today so you can start thinking about using that money for the utility of continuing your investment journey into the future. Is that pretty much how it works?
Yeah, and I suppose I'll give you a real quick case study of an example that we did the other day, and it'll sum it up for you. So we had a client that had sold their property for around about $1.5 million, had plenty of equity in the property, around about $600,000 in equity. They wanted to purchase at auction on the following Saturday, but they required a 5% deposit, which they had got it reduced and negotiated. So that was $88,000 deposit they required to purchase. They went to the bank. The bank said to them, yeah, we can get that done for you, but it's a bridging loan. We have to do a valuation, even though they had an unconditional sale on their property. So basically, their chance of getting the $88,000 for the deposit was slim to none. I basically got a mortgage statement to Realty Assist. We understood she had $500,000 equity. We understood she had an unconditional sale. I gave her the $88,000 that day. She purchased the property that Saturday at auction. I charged her $3,000 for the funding. So she paid me back $91,000. And in reality, the $3,000 fee as a percentage may seem a little bit high, but that $3,000 allowed that person the opportunity to purchase a product that in a Sydney market at $1.6 million today, in 4 to 6 weeks is probably more like 1.65. So that $3,000 is the cost of doing business, I suppose, but a good cost in my opinion.
And that's how property investors need to be considering this, the cost of doing business. I think most people in Sydney, if you've got property in Sydney, you're making more money a week in your property going up in value than what you are actually working. So you will front 80% of the equity in the property. Is that correct?
Yeah. So provided they have an unconditional sale of that property, or even a conditional sale we'll look at. So if it's a conditional or unconditional sale, basically we just understand how much is owing on the property, how much the property is sold for, and I'll fund up to 80% of that immediately. And with that as well, we do fixed quotes. So we do a quote, basically, just simply go to our website, put in your details, and we'll simply, advise you what that will cost. And we fund on the same day every day. Obviously, with the exclusion of Saturday and Sunday, we don't fund on those.
So what security do you take in order to issue that finance? Is it like a second mortgage against the property, or how does it work?
So the beauty of the way we do things, I suppose, as a non-traditional lender, there's no impact on your credit file. So we don't do a credit check. We don't look into your details. The reason we don't do that is not because we don't want to understand how our clients, are positioned, but rather if we do a credit check, it actually has a negative impact on you when you go to do finance and so forth in the future. So we don't do any credit check at all. We simply execute a deed where that deed will go through to the settlement agent or the conveyancer or the legal practitioner who's taking care of the settlement. And that deed basically gives us the right to the funding to get back at settlement. So typically PEXA, when they do the release of funds, some goes to the real estate agent, some goes to the owner, buyer, vendor, whoever it goes to. And we take our portion, which is, normally, 99% of the time, available from the research that we've done prior to doing the deal.
And is that sort of primary? So the money that goes to the actual vendor is subordinate to you, and also the money that goes out to discharge the loan against the property?
So typically, I think we're all on the same page that banks are always primary. No matter if you try to put yourself in front of a bank, I don't think that ever happens, but typically we'll fall in second. So you could effectively call it a second mortgage, but really what it is just a deed to the right of those funds to be distributed to us over being distributed to the client. So we obviously have an 80% cap on there, and that's through research. So we understand that there's going to be removalist costs, there's going to be cost of real estate agents and so forth, but 20% buffer gives us quite a lot of comfort around that space. And on that basis, it's typically very rare that we'll lend up to the full 80% because people generally use that service as a stepping stone to the next one, or a bridging loan, if you really call it that, because they're taking a stepping stone. They only require 5% of the next property that they're purchasing. As an example, that client that I just mentioned probably had about 500,000-600,000 in equity. I only gave them 88,000, but that's all they required to get the job done.
And how's it been so far? You're dealing in, I guess, known quantities. The fact that you have a signed contract for a particular property, if the property falls through, no doubt there's some implications around that. But by and large, you're getting your money back each time around.
So we have a 100% return rate. So we've never had a deal fall over. We've had deals that have been delayed and pushed back. Especially through the lockdown, we actually saw quite a lot of that happen. And not materially bad, but things were pushed back 1 week, 2 weeks and so forth, just due to access, final inspections and all sorts of issues in that space. And it's not something we promote, but we have a care plan. So if something actually goes wrong in an unconditional deal, I'll freeze the interest, and I'll freeze the interest up to 6 weeks for our clients, because we understand that 99 times out of 100, that won't happen. And if it does, it's no one's real fault. So in that case, we freeze the interest and we will leave it at the position that we are. And, we just do everything in our power to assist the clients to get the deal done.
And this is a property show, so we should talk about interest rates. Do you just apply a fixed interest, or does it depend on the size of the deal and some of the uniqueness of each deal?
So we currently have a website, and I'll give it a quick plug, so realtyassist.com.au/settlements. So for that specific product, if you go on there, there's a calculator. So you could put in the funds that you want, how many days you want the money for, and it'll spit out a number for you. Real quick case study, I did 12,000 for a client in Nambour yesterday. They paid us back $418 because they only needed the money for 30 days. I mean, if you look at that, the application fee with a traditional lender or bank would be $395 plus exit fees and so forth. We don't charge that. So it's just a once-off credit fee and then an accruing interest per month if they go beyond, 60 days, which is our standard amount. So it's nice and cheap, really.
Yeah. So the way I see it, it's an enabler for continuity of investors on their property journey, and actually being able to realise some of the equity you have, even though it's tied up. I can see that sort of appealing to many investors. But I know there's some other applications to the product. We'll chat through it. Let's go to a quick break. Back in a moment.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show with Sam Redke, who is the director of a really interesting business which is changing the way in which investors can access funds, Realty Assist. Now, Sam, I'm a bit of a finance nerd. So you're sort of fronting the cash so people can, in this particular product, can go about buying another property, buying another investment property, move into the next house, whatever it is. Where do you guys get your funds from? Can you tell me a little bit about that?
So typically one of the questions we always get, which is good, we're currently privately funded. So among our shareholders is where the funds come from at the moment. We found it getting the money from ourselves is a lot faster, and we've got a lot more availability to put into places and trial out different things. Again, like I said, going back to what we said before, we haven't had a default or anything fall over, but knowing it's our money, we're in control of it, probably is the best thing at the moment. Having said that, obviously, as we grow to a loan book size, if you want to call it a loan book, we'll probably look to warehouse fund that with probably one of the top four, the major four, obviously banks. But currently, we're well positioned to fund, in excess of $20-30 million with our loan book at present, and that's through the founders and shareholders of the business.
So how much sort of credit would you at the current moment would you have it extended out to customers? It's out there for like 30 odd days or so, is it?
Yeah, so typically our average sits out there for 50 days across all of our products, and probably not something I want to open up to. I unfortunately feel how big my loan book is. I apologise, but on any given day we can range from 250,000 to 1.5 million. Last week I think on a Friday we did 2.5 million in one day. So anywhere from 250 to 2 million a day, I suppose.
I'm trying to get a sense for sort of uptake from investors and the type of investors who are attracted to a particular product like this. Is there any sort of signals you see of those investors who are aware of or connected in with using this as a utility?
Well, I think that's one of the biggest things is simply awareness. And, that's why I'm so, grateful to be on the show. And obviously I know you guys have got a great audience is typically if you ask 9 out of 10 investors out there, if they saw a dream property and just say it was the ideal opportunity, but they had to settle on it in 7 days, most people can't get the access to the funds. Whereas with us, they can. So, and that's, for me is the important part about brand awareness. If you've got an opportunity, you've got something you want to attack and you want to attack it head on, pick up the phone, jump on the website, come and see us. Typically we'll help with those scenarios, and we can do it in a very fast manner, I suppose, non-traditional lending. So in that space, the take-up is going very well, but it's only can be taken up by the people that are aware of our services. Having said that, most clients that have used us, I've got quite a few developers that use us for developer DA approvals, subdivisions, finishing construction and so forth. Very rare. I basically have a 90% rate. Anyone that's used me once, typically within about 30 to 60 days, they come back and use me again. So I think the service obviously works. It's just about getting the awareness out there. People don't know that this sort of service is available and the money is that easily obtainable, I suppose.
And I guess, to your point, out of the box type solutions, and no doubt you're receptive to people. I'm just thinking about scenarios really. So, I'm a property investor, and you can use this as a case study. And I'm currently doing a refinancing with a bank to release some equity, but an opportunity pops up and I need to execute today and put a deposit down. Do you fund that sort of stuff?
Yeah, absolutely. So if you've got the equity in the property and you want to do a refinance, effectively you're going to do a bridging. If the equity is there, then absolutely I can do a deed across that. The things that we look at basically is how we can exit from the loan. Typically, because of the way our business works, I don't do funding more than sort of 90 to 120 days is typically what we would look at. So a 3-month funding, similar to a bridging loan. We typically like to have a property sold, but if you're looking to do something in that space, we know you'll generally be a return customer. Absolutely, I'll do everything in my power to help you, and we can normally get it done within 48 hours because, like I said, by having the loan book covered by myself and the other shareholders of the business, I can make decisions where I don't need to put it through policy that a traditional lender does. If we think that you're good for the money and you've got the right position, we'll help you out.
So you put the C back into the credit environment, which is largely character, right? Like when you had the sort of bank manager years ago, was it credit, there was character and all this sort of stuff. So you look at, I guess you view serviceability and view your investability as someone who's wishing to front credit to someone, all the different areas of it. What's your background, Sam? Like, how'd you end up doing this?
I grew up in Indonesia for 16 years, so always learned to hustle on the streets and don't take no for an answer, I suppose. But beyond that, obviously, I moved back into Australia. I started my career in property with Remax Extreme over here in Western Australia. Sold a bunch of property, moved into the development space where I was a sales manager for Stockland. And since then, I've been with some of the major builders around Australia. And more recently, I was actually with Purple Bricks as the state director for Western Australia. Where a lot of these ideas actually came from. So Purple Bricks, love them or hate them, they had quite a strong model that took a lot of market share. Whether they hung around and got the job done is, a different story. But they had a strong model. They got some market share. and they really understood how to disrupt the industry and change how real estate was done. I've tried to take a less full-on approach to doing so, but helping in a space, I think the finance space is overly, not in trouble, but just too slow. Everything over here is too slow, and that's why a lot of these companies are coming out and doing very well. You look at MoneyMe in that space as well. They've just moved into car loans where they can fund you in 2-3 hours. That's what people want. People want access to money fast. Yeah. And they're happy to pay for it if there's an opportunity at the other side. Obviously, there's a cost of money, but there's a cost of missing opportunity, FOMO, fear of missing out. Everyone's in that space. You look at property over here in Western Australia. I went to a home open the other week. There was 14 offers. This is not through auction, but 14 written offers on the property. And properties here are selling for probably 100, 200,000 over what they should sell for just because of FOMO. Now, if you're going to miss that property because you don't have access to money from the bank, then it'd be good to know there's someone that can give it to you. And that's where we come into place, I guess.
Well, I was sort of having a chat the other day with Tom Panos. I do a show with him called Real Estate Exposed. And I was talking about the inefficiencies of the mortgage system right now and whether or not, the old mantra for property investors was get all your finances sorted out, get yourself a pre-approval and then go and buy. And I just, like my view is there is so much inefficiencies in that you've got mortgage brokers right across Australia sorting out pre-approvals for people that never get used, right? And it's just bottlenecking the system. A bit outside of the scope of this chat, but when you look back through the history of finance Australia, there's been some innovation there. You only need to think back to the couple of decades ago now, your Aussies and the Wizards of the world, which changed non-bank lending. You could get a home loan for much cheaper than the banks. A dollar from those guys was exactly the same dollar from the banks. And you see this innovation. I think Australia really gets behind innovation. You spoke about MoneyMe. It's a really good business. I know the guys well over there, again, changing the way in which people can access funding. And it's all about utility, right? But I was going to ask you, mate, growing up in Indonesia, how's that work? From Jakarta or somewhere else?
Yeah, so I grew up in Jakarta for 16 years. English is my second language, so don't hold it against me.
No.
I speak fluent Indonesian. So my father worked for the United Nations over there in engineering. He's still over there now, actually, despite COVID and all that sort of stuff. But no, so, I grew up over there. I learned in terms of a sales aspect, don't take no for an answer and always think, and I suppose that's the biggest thing, like I was saying before, Phil, is just, don't be restricted by what people tell you because it's the only way to have it. Pick up the phone, ask me, ask someone. Typically, we're only limited by what we know, what can happen. There's access to funding. There's money out there. You can get things done. A property that you thought you couldn't buy because you weren't ready to buy, maybe you can buy. I just say think outside of the box. Have that don't take no for an answer attitude that I have, and you'll typically get things done and find things that you never thought existed.
Well, no doubt a great education. And I've spent quite a lot of time in the Middle East, and again, it's a mindset thing, right? Like you get a different set of skills that you don't necessarily learn from the books, right? And being able to think of things pragmatically and creatively, being outcome related is absolutely critical. I think the best property investors I know subscribe to that mantra. Don't feel as though you're confined by the rules that you think dictate and govern property. There's some baseline fundamentals with it, but you need to be, like the streets of Indonesia, of Jakarta, you've got to be able to hustle, right, and do it well. And property investors do that. I want to go to another break. When we come back, I want to have a look at some of these other applications of this particular product. Stay with us, back in a moment.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back, everyone. Phil Tarrant, Smart Property Investment, with Sam Redke from Realty Assist, talking about the buy now, pay later for property investors. Now, settlement, I get that. That makes sense. What about on the rental side? So, I've had issues in my portfolio. I'm just thinking about, applications for something like this of how I could use it. I had to replace a roof the other day. I would have liked to have fronted that with someone else's money rather than whatever. I wanted to jack the rent up. So you can actually go about doing repairs and maintenance. Will you front the finance on that sort of stuff and allow you to recoup it out of the rent?
You would have seen over here probably, well, you guys are probably quite fixated on the news with COVID over there, but in Western Australia, we've had more rain in the last probably 6 weeks, 7 weeks than we normally have in a year. So absolutely, we have a product called LMA, which is landlord maintenance and advertising. We've been inundated with inquiries. So basically, leak and roof, as the exact example you said, an invoice will come out to yourself as an example to repair that with a couple of quotes from a couple of different people. Let's say it's $1,000. With us, you'll have a pay now option to pay via your credit card or pay later, and you can pay that over bite-sized chunks installments. A little bit of interest is applied, and we'll take, the real estate company will take care of it for you, and then you just pay us back out of portions from the rent that you receive weekly or fortnightly. Absolutely, we do that, to the point that even in August in Western Australia, I'm not sure if it's the same across the country, but we've got an office in New South Wales, so similar sort of stuff happens. But basically, even to the point where people pay their rates and their council fees now, the real estate agency is sending them an invoice, and most of our clients, in fact, over 60% of them, are opting to pay their annual rates and annual fees over an 8-week period with us with a slight interest applied, because they can pay it off in chunks from the rent they receive. So we cover that as well. Absolutely. Cover everything.
So we front like a credit line up to a particular amount for those sort of expenses. Is that what you do if it's connected with the property?
Yeah, absolutely. So we have some people that do that for maintenance, landlord and maintenance, I suppose. But also if you wanted to make enhancements to your property prior to getting it ready for rental, just say you wanted to spend $15,000 to do up your kitchen, do up the flooring, to increase the price that you're going to rent it for, but also give yourself additional equity and put, value in your home or your, unit. Absolutely. We'll fund that as well. And we'll just take it back out of future rental payments that you obtain. So no worries.
And would you front, say if I'm looking to sell a property, whether it's owner occupied or investment, say investment, if I'm looking to sell it and the real estate agent goes, yeah, Phil, the place looks good. I reckon I can get 300 grand for this. But if you did A, B, C, D, E, F, G, I can get 350. Probably cost you 20 to do it. Will you guys front that for the purpose of sale?
So 50% of 45% as of the other day of all of our clients, when they go to sell their property, they'll fund the vendor paid advertising through us. 25% of those clients who fund the vendor paid advertising through us take additional funds to do works to their property. So that's already the case. So if you look at it, basically 1 in 10 clients would take, the money from us basically. And that can range from anywhere from $3,000 to $100,000. So whether it's just doing a paint job on the property to get it, you're going to get a better sale or a faster sale, not necessarily more money, but a faster sale, better outcome. We'll do that right the way through to we're funding a Heritage home at the moment where they borrowed $103,000 at the moment for quotes to put on a couple of extra rooms, bathrooms, and get that done. And for us, it's a really good story. The client will likely pick up an extra $200,000 to $300,000 on sale. So it's a win-win for everyone. And for his funding in that, basically, he'll fund that probably going on 8-9 months for us, and it'll cost him around about $6,000 in getting the money from us, where he could have, wouldn't have got it from the bank in the first place.
So because it's just the ways in which you can use this is really up to the imagination of the person who's leveraging the money. It's all property related. You only stick within property. You don't do other stuff as well. You're not doing car loans and all that sort of thing.
So we'd like to stick specifically within property. However, just a sneak peek for you, we're just about to introduce a GST product. So we had a lot of clients coming to us, and this is what I encourage everyone that's listening at the moment. If you've got an idea and you need funding, pick up the phone, give me a call. The 1300 line goes directly to my line. I've kept it that way specifically so I can, keep my finger on the pulse with clients. But, we had a client call us up basically recently and said they want to purchase a commercial property. They need 20% deposit for the commercial property, plus they've got to have the 10% GST up front. So effectively, they need 30% of the property. So he said, could you fund me the GST and I'll take the money, e.g. I'll pay you back when I get my BAS, the other way around. I said, absolutely I can. What that's done is it's enabled him to look in a higher different priced market, because 30% of $1 million is 300,000. But if he's got 300,000, he can now look at 20% of that. So he can look at 1.5 million because I'll front the GST for him and he's going to get that back at BAS anyway. So it's going to cost him probably around about $6,000 to do that for 6 to 8 weeks. But at the end of the day, he's looking at a property that's worth 500,000 more than he was before, and he can really harness and get into the needs he wants. Now, that wasn't something we were going to develop until someone picked up the phone and said, hey, mate, can you do the GST for me? Absolutely, I can. It took me about 48 hours. We put the agreement in place. You'll see the product come onto our website in probably the next 2 weeks.
Oh, there we go.
So we can move and rock and roll pretty quick.
And, property is an interesting game sometimes because, you might not necessarily always negotiate just on price when you're buying or selling. There's a whole bunch of other ways in which you can factor in some negotiation and changes to that. So, be creative. There's nothing wrong with that. No, Sam, it's interesting, mate. I've enjoyed the chat. I'm just sort of sitting thinking all the different ways that a product like this can work. And essentially what you're doing is buying yourself time, right? There's a small charge against that time on the interest you pay. But, one of the biggest, and I must have spoken to thousands with an S of property investors. And every good property investor I know, you ask them the question, what would you do differently if you had your time again? They say, I wish I moved faster than what I could have, because I probably could have that time, but for whatever reason they didn't. A lot of it is access to money or complications with, financing and using a broker and access to capital through banks. So if you can have an enabler in terms of short-term access to cash, it can really change your investment journey. So yeah, thanks for sharing that, mate. It's interesting stuff.
And that's exactly what, I had to get out of chatting with you today. Just think outside the box. You keep thinking, let me know your ideas, and I'll keep plugging the money into the industry and help the investors get the job done.
Well, it's and again, it's the utility of a product like this is good, but you need to make sure that you are making the right decisions around it. To work out, Sam, for good sort of rigor and sort of prudential sort of insights into this, who can help you make a decision on whether or not this sort of product is right for them? Is it sort of, an accountant sort of thing? Would you ask them how it would work if you wanted the third party?
I would always look to a third party outside of us as well. But when it comes to, as an example, with the settlement collect product that we use, typically when you actually compare the rates, the timing and so forth, we'll be on par with the major four. But I would always encourage people to get their own independent advice. Having said that, don't let your advice and independent advice get in the way of getting the deal done. E.g., if you're going to get advice, have someone that's good, reliable, that can get you the advice within 48 hours, because I'll have the funds sitting there waiting for you. If it's going to take 3 weeks, then let's be honest, you're better off going to the traditional bank and just wait the 3 weeks for them.
Yeah.
You're in the same boat you were in the first place.
And I've always said this on the Smart Property Investment Show, not all accountants are created equal. Some accountants really get property and they're property investors themselves. And I think of my particular accountant, I'm a great operator, but you want to run this past, look at all the different angles with something like this. I think as an enabler for accelerating wealth creation opportunities through using products like this, I think that's cool. But make sure you're doing the background analysis on how it fits into your particular circumstances. But Sam, thanks for your time today, mate. I really enjoyed the chat.
Same, likewise, really appreciate it. Thank you for that.
Nice one. That's Director of Realty Assist, Sam Redke from Indonesia. So that's where the Dutch comes from then, the Dutch East Indies. Jakarta. That all makes so you must have a long background out in Indonesia then, I would imagine.
Yeah, a lot of background, a lot of connections over there. So we might actually look to get our funding from over there, because funding is pretty cheap over there from what I understand. But we'll see how we go. At the moment, we'll keep it in-house.
Yeah. Originally called Batavia, correct? By memory, Jakarta, correct?
Yeah, and then changed to Dijakarta. And funny fact, Heineken and Bintang taste exactly the same.
Yeah. Well,
you can figure out why, but I mean, you try them, they're exactly the same if they're both cold.
Terima kasih, sampai jumpa nanti.
Bagus sekali.
Hope you enjoyed it, everyone. That's Smart Property Investment Show. Remember to check out smartpropertyinvestment.com.au. If you're not yet following us on social media, you can find it at Smart Property HQ. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.